So, I wanted your thoughts first on this whole leadership change in the market. Between 12,000 last time and 12,000 now, the bank nifty has actually fallen quite a bit, and IT and pharma index are up 30 to 40%. Do you think that's shifting indicating some kind of tectonic shift, or you reckon this is just temporary?
I think this has been happening ever since the market started going up. So I think that trend is continuing as of now. But what I see as the economy recovers and as probably we see more numbers coming out of the financial space, we see that there could be surprises that could come through. Like when I was going through some of the numbers of these MFIs and SFBs, the collection efficiency is well over 90% now. And in some cases, like the MSMEs in some of the company reports, it's at about 98%. So, when I see these numbers, they're a little bit surprising and probably better than expectations. I think a lot of expectations around that are more muted, and therefore you see financials probably not performing to that extent as what they should in a typical, given that they form 30% of the index. So far, we have seen very good results coming out from pharma and IT pack, and therefore, given that the certainty element there is much stronger, we see them continuing to lead the pack.
Okay, Anish, afternoon. Good to have you on the show. Since you mentioned pharma and IT, let me take up the latter. Now, on IT, TCS has really shown the path. The question is, in terms of a valuation re-rating, a multiple re-rating, how much more can these stocks go?
I think it's a function of how much premium you want to pay to certainty. So, 10% ago in terms of TCS or Infosys or, or this IT counters, one would have said valuations are still looking rich and they still continue to outperform. I think this market, ever since it's been 2013, 14, 15, is paying a lot more to certainty of earnings than to cyclical earnings. So certainty gets a super premium, and that will continue. So in my view, if IT continues to demonstrate the certainty aspect, I think valuations will keep on getting elevated.
Okay, that's on the IT stocks. I know you may not want to talk individual stocks, Anish, but this whole debate surrounding ITC and the kind of value trap that it's been for so many years. What would be your view here?
I think what happens typically is that in each of those areas where, let's say, earnings growth is very strong in some of the companies, people prefer that. And where earnings growth is not that strong, it goes by the wayside. So you literally have to look at some small pockets of time. But I guess this is just a phenomena which is a passing phase. And at best, the way one looks at it is that valuations will do have an impact on how the stock will perform in the near future. So to answer that query, I think valuation will play a very important role in decision making at some point of time. It just requires a trigger.
Okay, let's talk about the mood of the consumer then, Anish. And I'll put that question in the form of autos. Do you think this festive pop that we're seeing, a lot of the inventory filling that we've seen, is this going to last beyond Diwali? And what would your stance be on auto stocks?
I think if one were to look at the auto sector, demand for a period of 3-4 months had been very sluggish. And typically, there was a huge postponement of demand, either because you couldn't travel to the dealership or you didn't want to take the risk of traveling to the dealership to buy something. But I guess there is some pent-up demand, and the expectation is that this pent-up demand will manifest itself in the oncoming festive season. And even the central government now has granted 10,000 rupees per person, an advance kind of. So that also could help me. Maybe it will help two-wheelers in some cases. But I guess because of this postponement of demand, there has been a pop. I would be surprised to see if this pop does not manifest itself in the festive season. I think all the stocks, if you see, have kind of taken that into account, and auto sector has been probably among the better performing sectors in the cyclical space.
Okay, that's also part of the unlock theme. The other parts have been, names like aviation, Anish, or cinema exhibition, some of these stocks, restaurants and all. But do you think these stocks have now run up a bit far ahead of themselves? Because even before COVID, it's not as if, these sectors were doing great.
Right now, I don't have a big view on these sectors because some of the names which we don't cover and some of the stocks which we don't cover there. So not a big, not that I will have a lot of idea on how it is going to pan out. But generally speaking, as these sectors open up and market is all about incremental information and incremental data points. So if incremental data points point out to be promising, and if one sees things happening, then these sectors will remain in limelight. That's how it could be. Nobody knows how things will pan out because some of the other countries have seen second waves coming up. We don't know how it's going to pan out here. So right now, we'll play it by the ear.
Okay, so that brings me to the overall market question. Anish, 12,000 touched today. Have bulls, have they had their run for the year perhaps? Or do you think that this market has some more steam and a little more legroom to go higher? Because the problem is, as Anuj keeps pointing out, that in this phase of the rally, it's been very narrow. Mid-caps aren't participating.
Yes, so there was this phase between 7,500 and 10,000, typically between 9,000 and 10,000 when the mid-caps kind of started participating in a big way, and they came back very quickly when the large caps kind of languished during that period. Now what we are seeing is once again markets globally and probably markets in India as well are following that cue of very narrow leadership. And we have seen that ever since 2016-17 that markets are kind of in a very narrow leadership zone, and the rest of the market is kind of not participating to that extent. So I think that phenomena is here to stay because once again, it's about certainty of earnings, and probably we see certainty of earnings coming only in very certain sectors. So given the fact that people are a little skeptical about the second wave, and they would still continue to prefer those sectors which will be less impacted by the virus.